Welcome back. At the commodities markets, the prices of rice fell after the Christmas holiday to 9,200 naira per bag. Exchange rate uncertainty, fuel price speculation, despite low wheat prices in the global markets, also is a major factor. The price of domestic wheat flour rose in forex controls and weak naira, and lack of clarity on subsidies also affects price movement in the domestic commodities market. Of course, we're looking at what oil is saying in the international community now. Let's now bring in Ada Konobi, the research analyst from the Financial Derivatives Company Limited, as she gives us more insight into these figures. Thank you, Ada, and good morning to you.
Good morning, Balaji.
Let's start off from the holiday. We are back from the holiday, and yet we're not. We're seeing the price movements still topsy-turvy for some of these commodities. Tell us more about that.
Generally, after the holiday season, going into the first quarter, January prices literally decline because demand reduces. So obviously in economics, if demand reduces, price will actually reduce. So that's what's sending rice prices down, because we know in festive season the demand for rice, especially in Nigeria, is really high. We send it out for gifts, hampers, and celebratory occasions. So but now prices are actually trending downwards. However, wheat and sugar prices are increasing because we don't actually produce enough wheat and sugar for local consumption. So we import most of these raw commodities into the country. And in the global market, despite low prices year to date, the exchange rate volatility is actually affecting the cost of import and forex restriction. So that is why you can see that already eating into the price of wheat, flour, and sugar. So, but yeah, going forward, pending any stability in the currency, we might see prices of wheat, flour, and sugar decline. But however, all across other domestic commodities, rice, gari, palm oil, prices are declining because there's low demand for these commodities at the moment.
Now, the planned removal of subsidy by the government is still a very big topic for us in the country. How do you think this would impact on the commodities market?
Of the fuel subsidy?
Yes.
Yeah, if the removal of fuel subsidy happens, it's mainly about the cost of transporting these goods from one point to another. So in the long run, it's good because traders won't have to factor in how much it costs them to transport this good from one point to another. So if fuel subsidy is removed, but it seems like it's still going to sell at the current rates anyway, so I don't think it's going to have a huge impact on commodity prices despite low figures.
Yeah, let's talk about oil. Oil is a very big topic right now.
Yes.
Of course, the challenges we are having in terms of oversupply is still there. How do you think, because based on what the IMF boss has talked about, that oil prices may be low for much longer. Those were words. The lower for much longer. How do you think Nigeria can come out of this problem because of our revenue base?
Well, looking into 2016, oil prices didn't even start off on a very good note. We know oil prices now are $32 per barrel. I mean, the lowest figures since 2004. Even the financial crisis that occurred in 2008, oil prices didn't go as low as this. So this will affect Nigeria basically because if oil prices in the global market is $32 per barrel, and our cost of production is approximately $27 per barrel. So there's a margin of about $6, and as opposed to what oil prices were last year, oil prices were about an average of $120. So the margin was $95 last year, and it's about $7 last year. So you can see the margins are actually crushing, and this will spill over into our government revenues. We know that 75% of our government revenues is derived from oil prices, and 90% of our forex earning is from oil prices. So this isn't looking too good for oil. Going forward, the turmoil in the Chinese market is still pushing prices downwards, and we have the story of the oversupply and a lack of demand. In China, the stock market have been going through volatile sessions, and we know that it's fallen about 12%. We know that the non-manufacturing PMI, which is the service sector in China, actually declined in December, which is a bit worrisome because if China is trying to diversify or move into a more service-based economy, their non-manufacturing PMI is also declining. So this has sent negative shocks all around stock market worldwide. It sent negative shocks to currencies all around the country, and as well spilling into commodity prices. So this isn't too good for commodity prices generally. And the US as well. The EIA recorded that the inventories for gasoline reached an all-time high, the highest level since 1993. So we know that refined inventories are increasing. Gasoline, distillates, diesel, and heating oil. So it's not very good. And we know that in the cargoes, we have ships are waiting to even load off oil because there's no storage for this. So it's not very good news.
All right. And I'm sure the outlook doesn't look good either.
It doesn't look good. But we have to try and diversify and stay away from oil, because oil is not looking, there's no light at the end of the tunnel for oil right now. So maybe more going into the agriculture and other services will
all right, and I'm sure there will be a lot more to talk about in the coming days as we'll track the developments in the oil market. Thank you so much for coming.
Thanks for having me
on the program. Ada Kunobi, a research analyst with the Financial Derivatives Company Limited. Still to come on Business Morning, we shift our focus on the address of the IMF chief to Nigeria's lawmakers. The chairman, Senate Committee on Finance, will be joining us on the program. Will stay with us.